Good morning, traders. Welcome to Tuesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check the news so that we know what's going on and when, so that way we're not taken by surprise by anything. So looking at the news calendar, starting off, we can see there's a bunch of minor, small news announcements today at 8:55, 9 o'clock. But when we move into 10 o'clock, then we have the CB Consumer Confidence. That's the first large and only large news announcement for today. The forecast is 89. As far as medium news announcements go, at 9 o'clock, there's the S&P K-Shiller, or the CS HPI Composite 20. Forecast is 8.6%. They also have at 16:30, today being Tuesday, the API weekly crude oil stocks, getting ready for the crude oil inventories for tomorrow. So we do have some news announcements, but there's not a ton on the list, and really the only time that we really have to be careful today is going to be going into 10 o'clock. So with that out of the way, let's jump into the daily brief for today. Let's see, what is today? January 26th. Let's see, let's do the numbers the right way here. 1/26 of 2021. First up to the list, we've got the NASDAQ with some pretty good continuation to the upside, and yesterday's pullback had a fantastic bounce off of an L2. It missed the midline support of the wider channel, and, well, it rotated all the way back up anyway, didn't stop it, and topped out at the top of the channel again. Really, really strong rejection off the bottom. The big thing that we have to consider here is that if the bulls were so strong, then what the heck happened here? Obviously, buyers bought it up, and that might have been an opportunity, at least for sellers who were stuck early or short, to get out of break even. So there's been a lot of opportunities on this pullback. But the problem is when the market tried continuing back up, now it's getting stuck on the inside of the channel high. That's not what you want to see. So more likely than anything, the sellers aren't necessarily going to win the fight yet, but they will probably be able to rotate it into a range if they give it a little bit of an oomph. And given the big move that we've got going on here, a lot of times with these big washouts like we've got here, the market will slowly grind its way back up to the top, but the high and low become a major level of support or resistance as long as the market stays around it. So it could be a day, it could be weeks. It just kind of depends on what the market wants to do from here. And over on the S&P, we have the, well, probably one of the best bounces I think we've seen in a while on the S&P. That dip back to L2 was at the bottom of the channel. It was at the DP. Everything lined up. It was about as perfect can get as far as a dip yesterday for swing longs go. But there again, the buyers fell flat. We haven't broken a new high. If the bulls are so strong, why is this falling resistance acting like a brick wall? We've got to get through this. If the buyers are going to take this further up, which arguably they were able to buy low, there was a lot of opportunity to buy on that dip. Now that we've ripped higher, we've made a lower high, a higher low, and now we're trying to push back up again. This is where buyers need to prove it and break out. And if they're able to, then back to the top of the channel we go. But if they're not able to, then this might need to rotate back down again, find some cheaper prices. And man, if it has to dip that far down, we could be looking at a 3-press low, which you can see drives prices real far. So it definitely needs to start pushing higher here, or we're sitting on a bit of a ledge. On the gold market, we can see it's continuing to wedge. From yesterday, the wedge got a little bit wider. That's really about all that happened. It's still stuck. It's still making lower highs and higher lows. It's not doing much of anything. The major zone of interest is going to be the break of this wedge, and typically the break of the wedge the first time around is usually a failure. So when you can stack that up with something else that will aid you in an attempted larger pattern, that makes it all the better. Now, what I'm talking about here is the fact that we've failed so many times for the sellers to break down through the lows that it's very likely they're stuck, and they're probably stuck pretty hard. Especially now that we've broken above that previous swing, that's where the break point for a lot of traders will be. And when it came back down, you can see they took that opportunity to jump out at break even. So if it does want to slide down just a little bit further, we've got that looming L5 just underneath those swings waiting to gobble them all up at around that 1827 or so, and then looking to ping the market back up. Now, if it does start breaking out early, then realistically that could be a sign for a breakout pullback and a continuation back up towards the 1900s. But I would really like to see a flush first. That would allow a lot more buyers in. Then we've got good old crude oil, which is still pretty much sideways. We've got a halfway decent bear trend going on, but it's a weak bear trend. Big pullbacks inside of here, but the market is still making lower highs and lower lows. In the bigger picture, the buyers have bought fairly aggressively the L2 low, and that pullback has a lot of structure behind it. It's not like this is a wild zone that nobody ever saw coming. This level has been messing around for a long time at around these 52s. So it's not a surprise to see, once again, buyers defending 52s. They bought the L2, bottom of the wedge, punch the market back up. Upside objective in this case is going to be continuing this wide channel that we've got going on. These pullbacks are really deep, but it's still continuing. So realistically, that puts a very high point of interest at around 53.50 for another progressive lower high and a potential rollover point for the market to try to break back down towards those 50s. We're not breaking higher, right? We did have a potential trap underneath the lows. And one big caveat here for the bulls and why the bulls are going to be targeting potentially above this is the fact that that new low broke down and then popped up and held as support. And when it holds a support like that, that's a pretty clear indication that whoever or whatever tried getting a breakdown here, it failed, right? They failed, it failed, they're stuck, it's stuck, whatever. Regardless, there's a potential squeeze. So initial selling pressure is going to be in the 53.50s or so. But if it does start squeezing higher, don't be surprised if all of a sudden we see crude oil edging up on 55 going in tomorrow, depending on how aggressive that squeeze is. I still think the top is closer than anything else, but we just don't have any proof yet. On the euro, we have still that broken L1 that buyers are trying to reverse back up. We saw an attempt to reverse it back up yesterday. Kind of fell flat on its face. I mean, it was a halfway decent bounce, but it really didn't go anywhere. Got the nice bounce off rising support, and no, it just kind of fell over. So with the buyers trying to take it further up and that failing down, a lot of interest is going to be on what happens underneath that low. Well, what ended up happening is a huge amount of accumulation. And the reason I say accumulation is because as soon as it went under, it immediately rocketed back up. This is what we were just talking about on crude oil. So we have the same situation. We broke out underneath it. It failed. Buyers will be buying the retest of that break point because their stops can go underneath the lows. It's a very small risk type approach, but the reward is very high. That does mean that the probability is also terrible, but buyers will be looking to buy in to try to get a short-term bounce back up on the euro, looking to try to regain that bigger trend. Remember, not too long ago, the euro was screaming higher. I know it feels really gross right now, but it seems like that sell pressure is, well, it's running out of steam a little bit. We're rounding off, and even if it does go back down to the lows, it's probably not going to be that aggressive anyway. On the cryptocurrency side of things, we got Bitcoin with its expanding megaphone inside of the wider constricting wedge. Good old Bitcoin with an expanding pattern inside of a constricting pattern. We've got this falling area of constricting resistance, which is still going to take a long time before it actually comes into play. It's still fairly wide. But the one thing that is standing up now is that these highs are lining up really nicely with the top of the wedge. And if we progress this further out, if we were to look at this as a cycle, realistically, then we should see something along the lines of a move off of the lows, which is typically what happens, right? We've got a low, low, high, back down to a low, back up to a high. The megaphone begins to form. Now, this megaphone can be drawn up a couple different ways. Obviously, as you saw there, we've got this high and that high. You could also draw one like this. If that's the case, we just had an overshot on the highs, and it still would appear as though it's looking to go down a bit further to finish the job. So with that in mind, sellers are looking for a bit more continuation down, likely back down towards around that 30,000 mark. That's going to be the big zone of support where the market's going to want to try to ping back up again. Now, if we can get a bounce off of that, that's when the rotation and timing and everything lines up for a secondary rally back to 36,000. So where we are now, it's smack in the middle. It's definitely not an opportune time to do anything. But if it can get a dip down to 30,000, or if it just starts screaming higher, then buyers have a really strong argument to try to carry this back up towards at least the nearer highs. And then finally, and a new addition to the daily rotation with all of its extra volatility, and now with the futures coming out in a couple weeks, Ethereum being added to the list. We've got some really good continuation to the upside here. Now, we've been saying this for a long time, but I think Ethereum brings a lot more to the table than Bitcoin. Bitcoin is a great cash hold, right? Bitcoin, in my mind, is a lot more like gold, where it holds its value. It just kind of stays constant. Ethereum is a development chain. That's something you can develop on. It has a lot larger implications than something like Bitcoin. Not that Bitcoin can't go to, 100 bajillion, whatever. But I think Ethereum, in the longer term, has a higher valuation. I think there's more implications that Ethereum can bring to the table, and I think it's worth severely undervalued right now. But typically, historically at least, Ethereum's been about the third of the value of Bitcoin. That's usually always been the case until more recently. So with that in mind, Ethereum is really, really behind, if that's the case. And noting that if it's supposed to be a third of the value, Bitcoin's trading at 30,000, Ethereum's trading at 1,300. Wait a minute. We've got a lot of upside potential here. So I think Ethereum has a potential in the nearer future to go up another 10 times. That said, January, February are typically not a very good month for crypto. We already know that. So with that in mind, is right now the time to do it? Honestly, it's a really nice zone of support. I don't think we see 1,000 again, if I'm totally honest. And if we do, it's probably not going to stick around very long. And realistically, now that the buyers are showing L2 support, they're breaking back above the top of the really aggressive wedge. This is their shot. And if buyers are going to take it higher, this is going to be the location that it tries to get that job done. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next time, I hope you have a fantastic trading day, and we will see you all tomorrow. Thanks.